in life, we live in a world of cause and effect, and that is exactly how trading happens. If you don't know the cause of a move, what's making this move to happen? Because I came to understand that price is not moving because of random lines on the chart or because of indicators on the chart. No, price is not moving because of all those things. Price is moving because of real bank and institution orders.
Mouka Godswill from Nigeria is our newest portfolio manager, and we have a deep conversation about smart money concepts, institutional footprints, risk management, psychology. This interview is not to be missed. He is a very experienced trader, very professional, and is already funded with multiple prop firms. So stick around to the end, smash that like button, and if you're interested in one of our funded accounts, use the link in the description for more information. Enjoy the interview. Mouka Godswill, congratulations, you passed the evaluation. How do you feel?
Thank you very much. I feel very good, Rodrigo. I'm very, very happy.
Fantastic. Well, I'm happy for you and very grateful, and thank you for attending this interview. It's going to be very inspirational for other traders out there, especially those Nigerian traders. And I see, you're representing everyone over there. There's very talented traders over in Nigeria. We have quite a few portfolio managers, also traders in the World Cup, traders that, enter our trading competition. So it's really good to see traders from there doing really well. So tell us, how did you get into trading? What made you get into trading in the first place? And how did you actually learn your strategy?
Okay, I got into trading 2019, before pandemic. But I'm still a student. I'm a medical student currently. I'm in my finals. So because I want to have an online source of income. Yeah, that's actually what made me to enter into trading. And
right, so
when I started trading,
you were studying when you first started learning. You're studying medicine, yeah?
Sure. No, I'm studying medical laboratory science in the College of Medicine.
Okay, right.
Yeah. So, and I actually wanted to have an online source of income, something I can do from home. That's not going to distract me from studies. That's why I when I was searching for such, then I now came about trading. Actually, even before then, I've been into trading maybe sometime in 2018. When I had no knowledge about trading, I was just reading online and registered with Muka Ep.60. I could remember, and just funded $100. That was my whole savings then. Funded $100 and did a matter of minutes. the money was gone. Because then I didn't even know what was lot sizing. So that was then. That's the journey so far. Actually, I've come to the point to know that maybe not one system. A single system is not enough maybe to make you a consistently profitable trader. I'm talking about from my own point of view. Because I've learned so many strategies for years, so many kind of incomplete. But I can say my strategy, I call it a system, not just a strategy. I call it a system because I combine wave analysis. Yeah, I do for fundamental study, the macro view, endogenous and exogenous analysis.
What do you look for out for in the fundamentals? What exactly do you look out for?
Okay, what I actually look out for is I go to some news websites. I read a lot of articles on the central bank website. Look at the meetings, what the governors are saying. I usually watch 247 Bloomberg Terminal to see what was breaking news and what's happening around the world. That's it. And as well, smart money concept is in my trading. I use liquidity areas, liquidity pools a lot. Just like if you're watching what happened in Euro USD when CTI came out, there was an equal high there that price went out to take out the highs before continue moving to the upside. So that is it. And I combine a kind of institutional goals like order flow footprint my trading to make it solid.
Fantastic. So how did you learn this strategy, smart money concepts and the fundamentals? Do you have a mentor, or did you just study on your own? How did you actually learn this stuff?
I previously had a mentor, but what I learned from the mentor was normal retail trading concept, what every other person can go on YouTube or searching on Google to see. But after doing that, I really saw that this is not the answer to trading, because I really understood that in life we live in a world of cause and effect, and that is exactly how trading happens. If you don't know the cause of a move, what's making this move to happen? Mm-hmm. Because I came to understand that price is not moving because of random lines on the charts or because of indicators on the chart. No, price is not moving because of all those things. Price is moving because of real bank and institution orders.
So what causes the banks to make these moves, in your opinion?
Actually, what causes them? They have a look at fundamentals. They look at the overview of the economy to make such moves. Because 80% market move because of fundamentals. The rest is technical. So, they always look at the macro view, because that's why I said macroeconomics is a huge part in my trading. I don't just go to the charts, analyzing the chart. Maybe even though I understand the structure, wave analysis gives me a better view of the market structure. But without that, if you don't know where the flow is going fundamentally, you need to be fundamentally driven.
Right. Okay. So how would you describe your edge? Like, let's say over 1,000 trades. How is it that your system is able to be profitable?
My system, the bedrock of my system, like I said, is wave analysis, because a lot of traders don't really understand structures very, very well. Because technically, if you don't really understand structure, when markets is an impulsive move or in a corrective move, wave analysis helps me to understand that, because it's just like a roadmap. Because it tells me a kind of forecast. Okay, we are expecting price to move to the upside, and we are expecting price to move to the downside. Our price is going to be in a corrective phase, because the way I see correction is different from maybe how other traders or walls out there in the public see correction. Because I see correction as a minimum in 3-wave structures. That's how I see correction, and that gives me an edge.
Yeah. So what is your step-by-step process to define a structured shift?
The basics of wave analysis is structure shift, not just smart money concepts when maybe high or low is broken. There is something I usually, because I'm a mentor as well, there's something I usually say: for every up move, there should be another up move. For every down move, there should be another down move. Correlating this as well to smart money concept is just like the order matching process. Well, that first impulse, when price moves to the upside, there will be what causes price to move is, for example, to the upside, excess unfilled by orders. So price needs to come back, leaving something like another block, or if you use volume profile, an area of value, coming back to pick the excess unfilled by orders to move to the upside. So in between that two upside is the corrective structure, and you see that price will usually take more time to come to the downside before pushing to the upside again. And that same thing happens as well when price is going to the downtrend.
Would you call that an institutional footprint? Is that this is what the institutions are doing? This is them. This is how they trade, right?
Yeah, that is exactly how they trade, and that is exactly how I understand the structure. Because I've as well correlated this, looking at the order flow footprint chart, to see reasons why that is moving. Not just maybe thinking, maybe using logic, but actually seeing the real thing happen. Because when I look behind the scenes, I see actually that yes, that first move, there was excess controlled by others. Price have left a lot of imbalance that it needs to come back again to fill before pushing again in that same direction.
Yeah. What time frame do you trade?
My system is a top-down analysis. I usually focus more on the 4-hour structure. I focus on 4-hour structure, but I analyze daily charts. Even I even start from Ep.60, any asset class I want to analyze from 1996 come down to the present day. Then I can now enter to TradingView, because TradingView doesn't have such data. So 4-hour is my main time frame to analyze structure properly to trade. Then I come down to 1 hour for my entry. When I go to the other frames, I pick my entries from 5 minutes charts, 10 minutes charts, 15 minutes charts.
Okay. And how many trades do you take a week?
I don't have any amount of trade I take a week. I only take a trade when the opportunity.
Right. So smart money concept seems to be a very popular strategy, like a very popular concept in terms of way of looking at the market. It's very dynamic because there's a way to use SMC for analysis. There's a way to use SMC for entry. But how do you use SMC for risk management? What is how do you look at that?
Like I said, I just want to see liquidity. Share price is going to clear liquidity. Make sure liquidities are being grabbed, taken out, using as well, knowing that this is aligning with move analysis. When I go to the other flow footprint, see institutional orders coming to such levels. But once they are ready, I take my positions and I put my stop loss below the low. So I don't put maybe I want to raise 2 pips. If my stop is 30 pips, I use it as 30 pips and do the risk management there, because my own personal account is different from the way I trade prop firm accounts. Even I even made my risk management to become more strict because I was trading classic evaluation, because that one is relative better. So I even came down low to not to break the account.
Okay, so how do you trade your personal account to the funding? What is the difference?
Okay, let me explain it this way, because traders, for example, this is a mistake that traders make. Let me say, for example, I was given $10,000 because now I'm managing $10,000 and my drawdown is 5%, it's $500. I take my account balance as $500 and not $10,000. So my risk is based on $500, sorry, not $10,000. So what I do there is I risk 3% of $500, and what I now look for is risk to reward, at least 1:6. That's just how I do that. If you divide that by $500, that means I have like up to 33 opportunities, which my system and patience and everything is like impossible.
So just to clarify, you, instead of looking at the entire size of the funded account, you look at what is the absolute drawdown, right? You look at that. So on your example, if it's a 10K account, you look at the 500 drawdown. Then you risk 3% of this, right?
Yes, of $500.
Of the $500, yeah, 3% of the $500, which equates to less than 1/4% of the larger sum, right? And you're looking for a 1 to 6 average. Is that correct?
Sure, 1 to 5 average, 1 to 5.
1 to 5 average, okay. And you mentioned earlier that you're using your stop loss. You use what the H1 structure. So you're looking on average around 30 pips stop loss, right?
Sure, 30-40 pips.
30-40 pips, okay. And the mistake that most SMC traders are making is that they're using like 2, 3, 4, 5 pip stops, yeah?
Yes.
Interesting. And you know what, I have to agree with you, because trading with a 2 or 3 pip stop loss, it's not consistent. I've tried it. That's how I know.
Sure, it's not consistent, because even the market may go in your favor, but you may be stopped at because of some little volatility that may come into the market.
Yeah.
Otherwise, it's not advisable.
Yeah, exactly. And the thing is, most of these institutions, they don't have a stop loss. So
yeah, sure.
So trying to, because what we're doing is we're looking at these institutional footprints, right? And we're looking to piggy bank off these moves. So because institutions, they have a certain way of trading at specific times of the day, they have a certain amount of volume that they need to fill. They leave these patterns, they leave these as we like to call these institutional footprints. So for us, we just identify this pattern at a specific time, whether it's in London, whether it's in New York, we trade this, right? We're all looking at the same information, but what the difference is between most SMC traders is how they manage their risk. This is what I've seen is been one of the biggest, I guess, obstacles for most traders using or learning about SMC. And what this happens, because they get the risk management wrong and their consistency is not there, they then get affected psychologically. So if they were to fix the risk management and not, like I like to go for the Hollywood trades, be the hero and try to go for those 1 to 50, 1 to 100 trades, with 3 pip stop loss, instead of doing that, you got to just be humble, right? Go for those 20, 15, 30 pip stops, very humble. But for you to then look for those 3 to 5 hour trades, which is all you need, honestly. It's like that if you can catch 2 or 3 of those every week, you have an amazing career.
Sure.
Yeah. So what do you think is the biggest struggle for funded traders?
The biggest struggle for funded traders, I would say, is knowledge not having the right knowledge, taking challenges, spending money on challenges without having proper knowledge, not just on strategy, but as well on risk management, like I explained to you. That's why you see most traders, they find it difficult.
Do you think that if there's too many good traders, good funded traders that understand risk management, do you think that the prop firms out there will be able to handle so many good traders?
They should, because they are there from what every prop firm is writing on their website, that come and prove to them that you can trade. So I think they should handle every good trader out there. Yeah. Because if you make money, you make money. You make money, you make money.
So who are you funded with?
Two prop firms, CTI Traders Imperium and Fund Your FX. I think that one is a new prop firm that came out a few months ago.
How much percentage do you think is the failure rate of funded traders? How many people do you think, as a percentage, fail?
Retail forex traders lose 90% of their capital in 90 days, which is their normal personal account. So I think for funded traders with a strict risk management and everything, it may be up to 95 to 98 or more.
Yeah. So what would happen if that changes? What if it was the other way? Do you think that these prop firms will be in business if 90% of traders were passing and progressing?
Sure, they should be in business if only the prop firm is funding real money, just like CTI here. A firm that is not funding real money, like we have seen some firms have come and folded. Obviously, they can't be funding real money like CTI and every other good firm out there. They will be in business.
Yeah, as long as it's a live account. As long as it's a fully live account, then it's a win-win, right?
It's a win-win, exactly. That does it. It's not a big deal.
Yeah. All right. So what advice would you give traders if they were currently struggling as a funded trader? What do you think they need to do?
Like I said earlier, focus on the right knowledge, your risk management skills. Always trade with have a trading plan and have a trading journal, because all these things I've mentioned helped me while I was coming up in trading, because you need to take responsibility of everything, because that is how you know what needs to be corrected. If you take responsibility of everything. The mistake most guys do is when they just go to the website and say what the first thing they look at is a scaling plan. They want to immediately skyrocket to managing $2 million, CTI Traders Imperium, and that's a very, very bad mentality, because the person is most likely going to fail, because there is something I call 4 P's that I usually teach my students, which simply means process, practice, patience, and profit. Keeping money at the last is usually very, very important.
And what is your favorite trading book, or a book that you recommend for traders?
Trading the Zone.
And what does your morning process look like?
If there is any setup, I watch, I take my trade. If there's no setup, I leave. So I don't just trade only currency pairs, as well trade commodities, because I also have times of the day when I trade something like US oil. I don't just trade those asset classes just like currency pairs and as well cryptos. I have time that I come trade these assets. So that's just how my routine is. By 5 p.m. West African time, I'm done for the day. I can go maybe relax with friends or read some books.
Awesome. Amazing. So what has been your experience with CTI Traders Imperium?
My experience with Traders Imperium so far is awesome. One thing I want to appreciate is the support I've been giving, maybe via newsletters, emails, articles, especially on the aspect of psychology. I must commend you, Rodrigo. I do watch a lot of your videos on YouTube, talk a lot about psychologies. Actually, I've really learned a lot from those things you're saying. Almost everything you say is just aligned with mine, exactly how I see things. And as well, the fundamental reports CTI usually releases, I usually take it with mind to see, maybe because you can't be right. So to see what is this person's view, because I believe the people producing such are professionals as well. So I look at the view, what are they seeing? Because I can't see everything out there on the internet or everything. So there may be some points that is on that report that maybe I don't have in mind, which I've seen that few times, and it helped me.
Yeah. Shout out to Aslan, the fundamental analyst. He's brilliant.
Oh, wow. Yeah.
Yeah, fantastic. Well, listen, Muka, God's will, I wish you the best. I hope you continue with your 4Ps, continue your process, and I think you'll do very, very well. So it's great to have you part of CTI Traders Imperium as a portfolio manager, and I'm looking forward to seeing you scale your funded trader business.
Yeah. Thank you very much, Rodrigo.
My pleasure.